Hey guys, it's Steven. I've been called one of the world's top arbitrage experts, and in arbitrage, I always have an anchor, something solid I can measure everything against. In trading, I use the 20 simple moving average as that anchor. Most of my setups start there. It's my reference point or my anchor on the chart that keeps things simple and consistent. But what's surprising is how many great trades start from something so basic. Let me show you on a chart what I'm talking about now that I'm not being attacked by bugs and I'm back inside off my deck. So what I'm looking for with the 20, when I use it as an anchor, is a movement away from the 20 to enter a position. When I'm doing arbitrage, I'm looking for a rubber band effect. So I'm looking for premiums to get large as that rubber band expands, and then premiums to contract. So when I'm doing arbitrage, I put on an arbitrage position, which is long warrants and short common stock when the premiums are large, and then take off that position when the premiums are small. What I'm looking for with the 20 is I'm looking to put on a position when I'm near the 20 before there is an expansion away from the 20. So the way that I do that is I look for power bars near the 20 that are moving through either support or resistance. In this case, and I'll make it a little bigger so you can see it easily. This is the Qs. I'm looking for this power bar, which originates near the 20, and it clears this support. Right there, this was a tweezer bottom from this little downturn here. This is the 2-minute chart. I get a move back above the 20. Right, nothing is really happening here as I move near the 20, a little away, below the 20, back a little bit above the 20. None of this is an entry for me. It's when I get that power bar. And again, a power bar, very little wick, and it's larger than the other candles. And I have a cheat sheet on trading the power bar. If you want that, just comment 20 in the comments below, and I'll send you that cheat sheet with the power bar trade. But this is what I'm looking for. It's very simple. A move away from the 20 that breaks, in this case, support. My stop is the high of the power bar. So right here's my stop. And my entry is in the bottom of the power bar. I want to take that position close to the time the power bar is ending. On a 2-minute chart, I'm looking at the last 10 to 15 seconds. I'm fine to take it at the end of the power bar. The reason being, I want to make sure it's a power bar, right? And then that's the stop for me, is above the power bar. Once this forms and I get this bar, this pattern is a common candlestick pattern with a large red bar, 3 green bars that are moving higher, and then another large red bar. It's a continuation pattern called the falling 3. So that is another trigger. If I'm not in here, this is another entry point. As this bar moves under this falling 3 pattern. Again, a continuation candlestick pattern, and then we have the major fall off. I was short this morning on this trade here as this bar moved lower. Again, this is the Qs on October 7th. But you can see how the 20 is important as an anchor. It gives me a reference point for my power bar to begin at. If it were a power bar higher, I would be doing the same trade on the long side. But this is a power bar lower, and then we fell off rapidly, obviously, after this power bar and this falling 3 pattern that's set up. And then I'm looking to take profit when I'm moving away from the 20. So when I'm far from the 20, that's where I'm looking to get out of the trade. Just like in arbitrage, when I put on my position at the high premium, I'm taking it off at the low premium. When I enter near the 20, I want to get out when I'm far away from the 20. That's where I'm looking to take profit at these levels. And also you have a hairpin turn at this level, which is a bullish pattern. We did continue to roll this morning and moved even lower after this pullback. But what I wanted to focus on again is the entry, like where I want to get in and how I use that 20 as an anchor and a starting position. This is the starting line, right? I don't want to take a trade that doesn't begin at the starting line, right? I use the hairpin turn here later, the racing reference. My start of my race needs to begin near the 20. Again, it's the anchor for me. I did put together several indicators that are based on the power bar strategy that I just described, as well as an opening power bar strategy. And now I have a reversal strategy that is based on that move away from the 20 that I describe in another video, which I'll link to at the end of this video. But you can see I designed the indicator to work for me and my trading, right? That's the power bar I'm looking for. And that's when I get the short indicator. This is an indicator at the end of the day that I wouldn't be taking, obviously, a trade at 358. But this, again, what I focused on today was triggered because my indicator is set up to fire when I get that move like that away from the 20, because that's my anchor again. And I'm basing the entry of my short position here on that move, that power bar move away from the 20. So again, very simple trade, a very simple setup, just using, the 20 is really the only thing I'm using. If you want to, you can put on a chart an 8, a 13, and a 20. And what you'll see is those 3 moving averages will move apart. It's the same analogy that I gave you a minute ago with the rubber band, right? They'll stretch apart and move together, stretch apart and move together. That's that same rubber band analogy that, again, I learned in arbitrage, 30 years ago, and that became a big part of my trading. It works the same with the 20. As a stock moves away from the 20, it comes back to the 20, away from and back, that rubber band effect. So I hope that is helpful in your trading. If it is, please hit like and subscribe. There's also a link to the indicators that I use to track this movement away from the 20 in the description below. Thanks for watching and good luck in your trading.